Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equity markets are poised for a muted start after scaling 6 months high. While all eyes today would be on RBI policy meet, SGX Nifty has been signaling a muted start coming in for Dalal Street, gaining almost 10 points. US stocks, they ended lower, rattled by the Bank of Canada's surprise rate hike. A rate hike that revived the worries of US rates that are expected to stay higher for longer. Asian shares at this point of time, they have been trading low as traders fret on Fed rates. FIIs, if you talk about that data, they've bought in shares worth around 1,382 odd crore. And if you talk about the DIIs, they've too bought in shares worth around 392 odd crores. Well, in terms of FNOQs, we're seeing 85 stocks that have seen long build-ups. This includes the like of Britannia, United Breweries, Navin Fluorine and Hindustan Aeronautics. Well, if you talk about the stocks which have seen long unwinding based on the OI percentages, there are almost 13 of them, which include the likes of Bajaj Finance, Mahindra & Mahindra, Rain Industries and Maruti Suzuki too. Now, the stocks that have seen a short being built up based on their OI percentage, almost 17 of them, Shriram Finance, Cipla, Ipca Laboratories, M&M Financials, these are some of the names out there which have seen shorts which have been built up. Now, if you talk about the short covering activity, that's almost rampant based on OI percentages for 74 of them. And that include the like of Siemens, JK Cement, Coforge, Manapurna Finance and Atul Limited. These are some of the stocks that we have in terms of the FNOQs. First, let us get going and discuss some stocks and strategies with Amar Dev Singh, Senior Vice President at Angel Well. Good morning there, Amar. I'm going to start off by asking, it's a crucial day, right? RBI policy meet. Much of the expectation and direction is expected from that outcome. But Nifty is all set to move into all-time highs, at least above that high of 18,887. Do you see that in the short term? And could you possibly also see an open sharp upside momentum from the market going ahead?
Yeah, I would say that the all-time high, though, it's definitely within reach and it's not very far off. So what we are seeing is that, as I've been saying for quite some time, that the stronghold of the bulls have been very firm. So in spite of some corrections here and there, we've seen the uptrend remaining intact. And today also being the RBI policy, I would say that most of the markets are not expecting any rate hike. So till such time we see some serious concerns coming up once again with regard to inflation. But if something of that sort happens, then we'll have to watch out. But otherwise, the markets are more or less factored in that maybe there could be some forward-looking statements as to what are the expectations in terms of inflation and interest rates. But having said that, I would say that the uptrend definitely still remains in favor of the bulls. So any correction should be used as a buying opportunity. Yeah, Nifty most likely is going to cross its all-time highs. Whether it sustains over that level, we'll have to watch out for. But yes, the trend is very strong on the weekly chart. So the intermediate term trend continues to be very strong. Long term is more or less definitely has a positive bias, and short term we've seen some sort of consolidation. But again, last couple of days we've seen some sharp up move. And also what we are seeing is that India VIX also is not a cause of worry. So that is again one thing, because that needs to be on the watch list of all traders. So that also is within very comforting levels. So I would say this could be an event today, but we'll have to wait out how it actually pans out. But the trend still remains up and positive. If I look at the levels for Nifty, we've seen a gradual up move towards the support level. So now good support is around 18,450, 500. That's the level of support. Upside, yeah, I would say 18,850, 18,900. That zone of resistance would be there. And also, if you look at the OI data, we've seen some sizable long build-up happening yesterday. And Bank Nifty, though, for quite many days, we've seen some very strong long build-up happening. So clearly shows that markets are anticipating that Nifty could reach its all-time highs.
Okay, if that's the, it is an important day, and from you, I'd like to know what is the kind of strategy that you would recommend our viewers right now. Do you suggest them to go long, or is there a level that you'd like to watch out for, play out, and then initiate any kind of long calls? Your assessment?
Yeah, I would say that being on the long side makes more sense, but I would say wait out for the data and the RBI policy statement because what happens is that prior to any major event, you see a lot of volatility on either sides. So the chances of the stops getting triggered remains very high. So and then you find that the market has moved in your direction. So rather wait for some clarity coming there. And levels to watch out for, I would say, because today being we could see some heightened volatility in the market. So any pullback towards 18,500, 550, 600, that could be a level where one could look at maybe going long. But again, remembering that upside till we don't see Nifty sustaining above the 18,000, 850, 900 zone, we could see some sort of consolidation. But the favor, I would say, the bias is in favor of the bulls. That's one. As far as Bank Nifty is concerned, Bank Nifty is also, we've seen Bank Nifty now trading more sideways and losing some sort of momentum on the daily chart. So that's the reason we're not seeing Bank Nifty sustaining above its recent high of 44,500 odd level. So it's more of a range play for Bank Nifty. So 44,500 and on the downside, it's 44,000. So it's a very narrow range. So if you look at both the Nifty and Bank Nifty, we've seen some narrow range. So
Sure.
it clearly reflects that there could be a breakout in either direction. Yeah.
Sure. Amar, I'm going to come back to you in just a jiffy with the stock recommendation that you have in mind, especially ahead of RBI policy. But I'm going to quickly address the 4 or 5 stocks that we have that you need to keep on your radar. This morning, Tata Motors, Tech Mahindra are amongst the large cap ones. D-Link India, Hudson Agro Products, and Tiragar Wagons. These are some amongst the other. Well, let's talk about Tata Motors first. The analyst meet out there. Brokerages have come out with a report on this one. I'm picking up the one from UBS, where the recommendation is to sell, and the target price is to an extent of 450. It says that the company has been aiming for a near zero net debt in India operations by FY25. It's targeting a strong double-digit EBITDA margin in the commercial vehicle business and a 300 basis point improvement in the passenger vehicle operational front business. EBITDA and free cash flow is expected to break even for the EV business too for this one. And Tata Sons is planning a almost a 40 gigawatt battery plant in Europe, and it's planning a 20 gigawatt plant in India. So that's the one coming in, and also it's also given an update in terms of the net zero carbon emission for the PV business, which is expected to take place by 2040. And for commercial business, the aim is for a net zero carbon emission is by 2045. The another one that I have on the list is an interesting one, D-Link India, where Ashish Kacholia has sold in 0.5% stake in this counter, almost at an average price of around 228 per share. Now, Kacholia held 2.11% stake overall in the basket and sold in a significant quantum. Tech Mahindra, another one that needs to be on your list. LIC has increased stake in Tech Mahindra to 8.88%. And the stake earlier was to an extent of around 6.87. The transaction where the stake hike has happened is through open market transaction. And the transaction took place in last more than 6-month period, with the average buying price being at the range of around 1,050 per share. So that's the word coming in for the Tech Mahindra, Tata Motors. Some of the stocks that need to be on your mind, on your radar watch list for today's session. But it's an important day, RBI monetary policy, and we're going to get you details in just a bit. Let's address the market open for you. Nifty 50. Well, like we indicated right at the start of the opening bell, we were expecting a muted start coming in for markets. But do bear in mind the fact that the market are at 6 months high level. Expect some amount of consolidation before finally some direction can be colored in by RBI monetary policy review. At this point of time, 18,700 mark, comfortably around that level. Nifty Bank Index at this point of time seems to have a little bit of negative bias to the flavor out there, but holding about that 44,250 mark, the crucial support level. Mid-cap index too, we're seeing gains coming in for that one to an extent of around more than 0.3%, outperforming the larger counterparts. And talk about the small cap index, that too is holding up in green with gains of similar quantum that we've seen for the mid-cap index. Overall, if you look at the other sectoral indices just to see how they are faring on the charts right now, first in the list we have IT index, which is down and out with losses of around 0.2% out there. And if you talk about the other sectoral indices that we have on the list, metal index, which is pretty much trading in green right now with gains of around 0.1% out there. Auto index too, the basket is rallying at this point of time. The entire gains with around 0.5%. FMCG too is holding up with gains of around 0.1% out there. And if we talk about the other sectoral indices, be it in the likes of pharma and for that matter even real estate index, that's the one which is although pretty much holding up in green with gains of around 0.2% out there. Overall, if you talk about the market breadth, 24 advances versus 24 declines, so it's pretty much evenly distributed, right? We're going to be talking about the top gainers and the top losers on the list right now. For top gainers, we have something in the like of NTPC, Power Grid and ONGC. These are some of the top gainers that we have on the list. Nestle India, Hero MotoCorp and Bharti Airtel. These are some of the other gainers that we have. Well, in terms of the losers, the list needs to be updated out there. Tech Mahindra right now has been one of the top losers that we have, but that needs to be a bit updated out there just to see how top losers have been faring up on the Nifty 50 index for you. BPCL, Kotak Mahindra Bank and Eicher Motors, these are some of the other top losers that we have, or rather just the key losers that we have on the list right now. Axis Bank, HCL Tech and TCS, these are some of the losers that we have on the list right now. But let's actually for a brief moment look at Tech Mahindra, what that stock is doing. LIC has increased in stake in the company, so that's clearly the one that we need to watch out for. The stake has been significantly been revised by LIC, almost 8.8% now in Tech Mahindra. Remains to be seen if the stock has been holding up. Well, at this point of time, looks like there is this entire pessimism which is set across the IT basket, and Tech Mahindra is no exception to that. So down and out with losses of around 0.3% out there. Amar, comment on this one. After the markets have opened, it's a muted start, but holding above that crucial mark. Now, with that, what's the strategy for Bank Nifty and Nifty?
Yeah, I would say that the strategy would still remain the same. That I would say wait out for the RBI policy, and then you can look at a buying opportunity. And because we will see some increased volatility, so the levels to watch out for Nifty would be anywhere between 18,550, 600 on the downside, because that's a good level to take an entry into. Upside seems to be currently capped around the all-time high, so we are very close to that. But the trend, the way Nifty is behaving, we'll have to watch out if the long build-up continues, because that momentum needs to continue. What we've seen in Bank Nifty for the last few days, that the long build-up has been continuing, but currently Bank Nifty is now caught in a very smaller range. So 44,000 on the downside and 44,500 on the upside. So that's currently it's around 44,250. So that's a very narrow range. Daily charts on Bank Nifty are clearly pointing towards fatigue. So that shows that there could be a balance of a balanced struggle between the bulls and the bears.
All right, Amar, top 3 recommendations that you have in your mind after the markets have opened and you think that the viewer should be holding on to.
I would say that one can look at Jindal Steel and Power. So this is one stock. We saw it correcting from almost 600 levels. Currently, it's around 530, 532. And long-term charts remain positive. In other time frames, we've seen the stock bouncing from the oversold territory. So this is one stock one can definitely look at. So anywhere between 525, 25 levels can be used as a buying opportunity with a stop loss below 500 and a target of 569 in the short term. And the second stock to look at is from the pharma space, because we've seen some very good positive activity in the pharma space. And this is Torrent Pharma, because this also, if you look at the stock from almost 1,500, the stock is currently around 1,800 odd levels. Long-term charts, be it the monthly or the long-term weekly charts, the momentum is there to stay. And even the short-term charts are clearly displaying that there is strong momentum in this stock. So this is one stock one can definitely look at on the downside. So any correction towards 1775, 1785 levels can be used as a buying opportunity with a stop loss of 1723 and an upside target of 1873 on the upside.
Right, that's the word coming in. JSPL and Torrent Pharma are the 2 stocks that Amar has recommended this morning. But we are going to be addressing in the fundamental side of the story. It's an important day. We're going to be talking a lot about the specialty chemical space, of course, and the financials, auto space, amongst the other. Tata Motors analyst key takeaway also is something that we'd like to discuss that in details. But to join us to take the discussion forward is Sher Khan, BNP Paribas, Sanjeev Hota out there. Good morning there, Sanjeev.
Good morning, Nikki.
Right, I'm going to start off by asking you your assessment overall on the auto stocks. Tata Motors has come up with, there is an analyst meet out there, and most of the brokerages have been talking about it, of how the company aims to be net zero carbon emission and also net debt free company overall. How do you look at it? UBS at least has a sell rating to it, but how are you viewing the entire basket, and how do you like the pockets that you like within that space?
Yeah, so for the entire auto space, we are quite positive for next 2-3 years, and I believe that most of the headwind that was there for this space was already out of the window. And I think that M&M, Tata Motors, or even Maruti is going to do well going forward. And more so in the ancillary space, I think the fastener space, I believe, is going to do very well. So Sundaram Fastener or the smaller companies also is going to do very well. So autos, I believe, in the one space is going to continue its outperformance over the broader market in the next 1-2 years. So we're quite positive on that. And coming to the Tata Motors, I think one thing that has changed, what we have witnessed, is that the body language. The management is quite focused on giving dividend rather than paying interest. So that is one thing I think that the biggest takeaways from the analyst meet yesterday. And apart from that, as you have mentioned, the carbon neutral or the becoming a net cash positive by FY25, they've already discussed this thing in the Q4 earning calls. But what is important is that they're quite confident on the revival in the GLR, CVs or PV space. And the optimism on the volume performance in GLR is quite positive from the Tata Motors. And I believe the stock is still available at almost 5 times EV/EBITDA multiple in FY25. So it looks very reasonable. And so we maintain our target price of 600. And I believe there's more upside to Tata Motors than the downside.
All right, that's the word coming in, more upside to Tata Motors than the downside. Also financial space, that is expected to be in focus, right? RBI monetary policy meet, much of the tone would be set in the meeting today. A, what's your expectation? And B, how should the traders now or the viewers be looking at this space right now?
Yeah, so I think this time around, this is going to be a non-event. The more focus will be on the commentary because if you see the inflation is coming closer to the mid-level of the RBI threshold level, the 2 to 6%. Now, the last inflation level was close to 4.7. So that is coming closer to the midpoint. So I believe this time around also the expectation is they're going to maintain status quo on the policy rate, and also the withdrawal of accommodation status will be continue to be there. But what is important to see is what kind of commentary is going to come out post the meeting, because the inflation, apart from inflation, the monsoon is really a problematic area that RBI need to focus on. And if they wanted to keep this rate pause for a prolonged time, they need to change the stance to neutral at least going forward, if not in this policy. So I believe that is the expectation I'm looking forward from the RBI commentary. And coming to this financial space, I believe most of the banks are very well placed, and that narrative is already played out. If you see the private bank or the PSU bank, that narrative is already played out in the last 1.5 years. And going forward, what we see is that the credit growth might taper off, but it's still going to be strong going into FY24 and 25. And is already picked out. And it has been like consensus now that is coming out from most of the management commentary. Important here, I believe, is that the NBFC space. The NBFC space, what we have witnessed in the last cycle, that is in 2018, I believe NBFC space is now in a very sweet spot. And that is going to see a major outperformance in next 1.5 years. I believe most of the NBFC, apart from the bigger one, I think the Bajaj Finance or the Chola Magnum of the world, if you see the mid NBFCs or this housing finance or the auto finance, they are still available at a very, very reasonable valuation. And the kind of, if the rate is going to take a pause, Already that has happened. And we are expecting early 2024, we are expecting the rate cut is going to start. In that kind of scenario, I believe NBFC is one space is going to outperform the banks. So that is what we see in the banking space, and our preference continue to lies in the private bank, that is ICICI, Axis, or in the mid-cap space we like Federal Bank. But some of this NBFC like Chola's or Mahindra & Mahindra Financial, even
Sanjeev,
the
I
L&T
get your
Financial,
point. I get your point there. The only thing that I wanted to understand between your banking space, you said that private banks and PSU banks, which is the one that you prefer the most, and NBFC, you said it's the mid-cap NBFC space which actually fascinates you. If you could put few names to it that you like within the space, that will really help our viewers out there.
Yeah, that is what I was
Please go ahead.
Yeah, M&M Financial is one company that we like, and another name that is L&T Financial that we like currently. And so these two company I would prefer in the NBFC space going forward.
Sure, that's one. I would also want to talk about the specialty chemical space out there, SRF analyst meet out there. How do you view this space, and within this space, what do you like, Sanjeev?
Yeah, though specialty chemical, if you see the last 2-3 quarters have clearly demarcated between the men and boys. So the true specialty chemicals and commodity chemicals, that has been truly demarcated now. So the companies which having an anchor client, long-term contract, having exposure to the innovator customer or the defensive end-use product, they are the doing quite well as compared to the pure commodity chemicals. And that is the clear takeaways from the Q4 number as well. So I believe the companies which are having the anchor client, innovator exposure, and long-term contract is continue to do well. And even if the valuation still looks very high for some of these companies, I would still prefer for an investment back in this space. I would avoid this commodity chemical space. I think they are still not out of woods, and the kind of China dumping that could happen going forward as well, because their economy is not picking up, and that too is going to continue. So I would avoid commodity chemicals, and I would prefer the true specialty chemicals. As I said, the exposure to the innovators and the multi-year contract. So I would prefer that. And in this scenario, I believe SRF, Gujarat Fluoro, and even the PI industry looks very good. And in the mid-cap and small cap space, Philip Carbon and Nozzle, what I like for an investment case, even though in the near term they might see some volatility in the earnings, but in the next 1.5 years, I believe Philip Carbon and Nozzle looks very good. And from the SRF estimate, I think nothing different of what they have already mentioned in their Q4 call. But one thing they are very confident is on the chemical space and their engagement with the innovator and the focus on the complex molecules make it more superior or relatively more defensive than the other players. And that is what we like in the SRF, with the multi-year kind of structural story. And they are making the right investment, right capex in the right area, which could give them a higher return or higher return ratio going forward. That is what we like in the SRF.
Sure, that's the word coming in on the entire specialty chemical space. We've also discussed enough and more about RBI monetary policy, financial, and the entire NBFC space. Well, Sanjeev, thank you so much for taking out the time and speaking to us this morning. Well, also two changes coming in from BofA Securities, where it's upgraded Paytm to buy and raised the target price to 855 and has downgraded PB Fintech, that's again a new age company that I'm talking about, to underperform after the recent rally. Target price has been maintained at rupees 600. So do keep an eye out on these two names. But limelight again is once again and back at the RBI monetary policy. It was set to declare the monetary policy decision of the entire financial year on June 8th. And to take us through the expectation is Dinesh Unnikrishnan, editor, banking and finance at Moneycontrol. Good morning there.
Good morning, Nikki. Thank you for having me on the show, and good morning to all of our viewers.
Well, the pleasure is all ours to have you, and we're just going to be chatting in about your expectation and assessment from the RBI. It's going to be declaring in the second bi-monthly monetary policy. What's your expectation with the bets now favoring in for a second pause in the repo rate?
Right. As you rightly mentioned, Nikki, the general expectation is for a pause Unlike last time when there was some section of economists expecting a rate hike because of 2 consecutive months of inflation above 6% in Jan and Feb, this time I would imagine that for MPC it's a relatively easier decision, because last 2 months CPI has fallen below 6%, and more importantly what we call core inflation, that is the non-food and non-energy part of the overall inflation, has also been coming below 6%. These are all positive signs. So with inflation abating and some sort of comfort coming in from the growth numbers as well, it's pretty certain that the MPC would go for a pause this time. So that's a given prediction. Yeah.
Change in stance that you're expecting, and do you have you already one can possibility rule out the possibility of a rate hike? When do you expect rate cut? Are some of the questions that I think most of the viewers would be looking at.
Very important question. So the stance is I believe more than the rate decision itself. What will happen to the stance is more important to watch this time. So what do we mean by stance? So RBI MPC has been sticking to this withdrawal from accommodation stance for quite a long time. But what do you mean by withdrawal from accommodation? The RBI had, as we all know, during the COVID time, had sharply cut rates to help the economy revive from the COVID period. So that is what we call the accommodation. But they started reversing that process in 2019. Since May 2022, particularly, there have been back-to-back rate hikes, which has effectively taken the repo rate back to 6.5%, exactly the point from where the accommodation, that process started. So they have taken away that accommodative stance, and rates are back to where it started.
Right.
So there's no point, there's no logic, ideally, just like Jayant Verma, one of the MPC members, highlighted in the last policy minutes, that there is no sense in continuing with the withdrawal from accommodation, because the accommodation withdrawal has already happened.
Right.
So one of the expectation today is that we will see the MPC diluting that stance from withdrawal from accommodation, and probably they will move to neutral stance. It's too early to talk about an accommodative stance, but I would imagine that the stance should change to neutral, which like I said, inflation has been easing, which is a positive news for MPC and for overall economy. And the second positive news is that the growth, there has been some recovery, 6.5%. Nobody imagined in the fourth quarter. The expectation was that around 5.5% something will come up. So if the inflation trend sustains, but for that there are 2 upside risk factors. One is that what will happen to the weather predictions. So the IMD has a somewhat normal weather prediction, but you have the El Nino factor playing out. What impact this will have in the approaching months on the overall output, on our irrigations, or overall agri production is a key question. Secondly, although food prices have eased in the recent months, some pockets like milk inflation and cereals are still high. As you know, these are the items which Indian households consume the most. So RBI would want to watch what will happen to the food inflation, the weather predictions, as well as the external developments, what's going on in Europe and US, etc. If inflation stick to the projections and continues to ease to the medium-term target of 4%, so that's the MPC's actual target, 4% the inflation.
Right.
If it moves towards to that on a consistent manner, sustainable manner, I'm hopeful that we should be looking at a rate cut by end of this year.
End of this year.
Till that time, the logic says that there should be stay on the post mode for the most part of the year. That's
okay, so neutral stance is what you're expecting in this policy stance itself?
Yeah. Some dilution from withdrawal of accommodation should, the language should certainly hint. Neutral should be the apt stance at this point, in my view. But, this MPC has always a ways to surprise the audience. So we can only, I would always say that the most difficult job is to predict the MPC outcome, because the MPC itself is a divided house.
I agree to that, but what's the last question that I have in mind is, of course, the impact that will have on the EMI and the home buyers out there, people like you and I. So how does that change anything for us?
Yeah, I completely get your point. That's ultimately, it's not the macroeconomics, it's what will happen to you and me, our budget, household budget, that's what matters. But Nikki, See, when we say interest rate, there are two aspects. What will happen to the deposit rates, what will happen to the loan rates. So deposit rates have been, taking cues from the RBI rate hikes, banks have been hiking. This has somewhat peaked. Now most of the larger banks are offering 7 to 7.1% for 15 months to 18 month deposits. SFB, small finance banks, are offering much more. But something has happened in between. That is the withdrawal of 2,000 rupee notes. Nobody expected that, right? Because now that people have started depositing back the 2,000 notes, I understand 1/3 of the overall 2,000 rupee notes in circulation has already come back to the bank. This has added to the bank's liquidity position. So which in turn makes it, takes away some burden from banks to attract depositors. They don't need to now chase deposits because they already have the surplus liquidity in the system. Also, the banking system liquidity is in surplus mode. What will this do is that banks will now start cutting rates. This has already happened on the deposit rate. Your question, what will happen to the EMIs? I would wait some more time for the policy stance to take firm hold, because this time, as we discussed, it's going to be pause. More than the rate decision, what is the signal that the MPC is conveying to the markets about future rate actions? Banks will watch that. If the indication is that we are going to see a softer interest rate regime, a gradual loosening of monetary policy, then there is a possibility that the lending rates may come down, which will positively impact the household, because obviously, as you said, the EMI will come down. For depositors, for savers, it's not going to be. I think the best time is probably over, because the rates have peaked, and from this point onwards, we should see deposit rate easing a little bit. But having said that, these are all an outsider's perspective. Obviously, the central bank is more data rich, more privy to information on what's happening. So we'll have to. It's going to be another 20-25 minutes to see what's going to come.
That's well put and well explained. I would say the stance, the commentary, which will be eyed and watched out for to provide a direction to the markets. But Dinesh, thank you so much for taking out the time and speaking to us this morning.
My pleasure.
With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.